Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Very interesting day, like they all are, I guess. Every day is unique, yet with a trade plan, you will get the opportunity to navigate the condition of the market. And since we can't predict the outcome of any trade, we need to have a plan that we have vetted. So over time, we have a statistical edge that favors us, even though each trade has a random outcome. The business of trading, as you might know, or if you've been in Trader Lab or visited Trader Lab, is a business of statistical probabilities, not of being right, not of predicting anything. And the other part of trading is each individual trader defines for themselves the time frame or the rotational environment that they participate in. Some traders put trades on for larger rotations. Other traders are going to trade inside those rotations. So it's very much a vertical integration of time frames, something for you to think about. So let's, one moment here, let me just check something. Okay, got to keep an eye on things. Let's move ahead, and there's a lot to talk about today. Grab a pen and paper. I'm going to give you some statistics and also have to do a little business here. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. By the way, if you're visiting Trader Lab for the first time or you haven't taken advantage of this, there's 60 PDFs of structured trades that I've shared. They are available to you at no cost in the Trader Lab. There is a link in the bottom of YouTube if you haven't taken advantage of this. Now, so you guys understand what structured trades are. There's no such thing as plug and play in trading. So I understand we all want plug and play. And if we think this is a plug and play business, I suspect you're going to be really disappointed. If it was a plug and play, everybody would plug and play. Everybody would have ATMs. And for some reason, that doesn't seem the way it works, right? So the idea of me sharing these is that traders were asking me, what are you doing? And so I just threw these together. And I'm not a vendor. I'm just an educator. And I've been trading 46 years. So along the way, I've walked in your shoes. It's just I wore out more shoes probably than you. But these are ideas for you to isolate and reverse engineer. There is no plug and play, and I want to emphasize that. Now, when you start building out a trade plan, you need to know which trades actually give you a statistical edge. We all have winning trades, just like gamblers in the casinos have winning hands. But over time, even though those gamblers have winning, hands, and us as developing traders have winning trades, it has nothing to do with longevity or sustainability. What the answer to that is statistical probabilities or edge. If you know you have a statistical probability, might that give you the courage to interact with the other participants, even though you know the outcome is random, and you could just as well pay the gamblers this time, same as the casinos do. But by playing a game or having a business model with an edge, and you have the discipline to actually follow that, same as the casinos do. You don't notice the gamblers changing the games, even if they pay a gambler. Over time, once you've done the work, you'll develop the confidence to be calm and to just do your work. And over time, that is the model that creates potential sustainability. And of course, you have to do the work. By the way, how do you create an edge? Well, Bruce's pilot program might be something you want to check out. It's in the Bookmap server, and it's about using the tools in Bookmap or just to help you understand how you can determine what an edge is. Also, in the Trader Lab this weekend, we had a very lively discussion on edge, and there were some materials posted in there. And again, it's available at no cost that you might want to saunter over to the Trader Lab and check it out. Plus, the Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. Speaking of experience, do you have a trading companion? We're at the end of the month, and if you haven't gotten a photo, take a photo of your trading companion and send it in. And by sending it in, use the hashtag BookmapPets, drop it on X, LinkedIn, or Instagram, and you will qualify for the drawing of who is going to win the best pet and get a free month of Global Plus. Very cool. Now let's get into the market. And guys, thanks again for visiting Trader Lab. If you're in YouTube, you feel free to use the link down there. If you want to visit the Trader Lab, there's no cost. All you have to do is confirm your Discord username. Keeps the riffraff out. You guys can appreciate that. This is the higher time frame. Now, here's a couple key pieces. First, simple concept. The market goes up to go down. The market goes down to go up. I know. Roll your eyes in your head. But why is it so important? If the this is the all-time high. That's a weak high. True highs look something like this, or if you have a excess high, it could just be blast, 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 blast. This is not a blast, and then a sharp reversal. These are more rotational ideas, and the idea of rotation is you've got the longs in here. Sell stops, sell stops, sell stops. We're out of here. Then we take the sell stops out, the sell stops out. Everybody's thrown under the bus, and the excess tail is down here. This is FOMC day. And what do we see here? We don't get there, and we get our shorts in here on this day. So they eventually become buyers, and our buyers down here when we're taking the weak hands out, they accumulate the positions. That sets up the longs. Where's the fuel coming back? It's here, the shorts. So where are we going today? Well, we turned around on FOMC. 66.60 is a key level. We tested it yesterday. It was our target on the downside. Those of you who follow the stream and watch these streams, if you watched it over the weekend, you know we already had this all laid out. Now, what we don't know, and let's always be realistic, is how, if, when, where. So the rotations are random. So as day traders, we might know where the market might go, but we don't know how it might get there, or even if, or anything. So that is randomness. So if we operate in randomness, we cannot know. But what we can know is how the market works, why it does what it does, and how at times to get in alignment with it. That we can know. And that's what the Trader Lab is about. 66.60, too low. Now, what's this over here? 66.97, the retail price from Friday. What else do we have? 67.41. This is an outside edge, possibly a target for today or never. And then 67.09. So we got 09 on the downside, and we have yesterday's high. So we can fill the gap here. So possibly come in here, fill the gap, come down to 97, and who knows, right? Not our job. But if it's your job, let me know. Now, let's look at this from another perspective. This was let's see if my eyeballs fall out of my head. This is Friday's retail price. Now, I want to show you Friday, what's so important. This was the target right here from Friday. And there's no precision in trading. You know, it's horseshoes and hand grenades. And I want to stress the hand grenade. And so we had shorts in the morning, and that was the target. And that's all in the stream. If you want to watch Friday's stream, it's up there in YouTube world. Now, here's a couple of things. Let me show you something that most traders don't understand. The market's an auction, and what it does is it rotates, of course, and it finds too high, too low, and it finds a fair price. Trading is shopping. I like to say this because, you know, we get all caught up in this, quote, technical analysis. Oh, it's so complicated, and we got all our spaghetti that we throw against the wall that hopefully will translate what's going on. Let me show you how this works. What's too high? You'll notice if you go to the store and your can of tuna is $4, you're probably not going to pay it. Somebody who needs tuna for the casserole might pay the $4, but there's no line outside the store. The volume dries up. Then if it gets on sale and the most recent retail price was down here, and now you can't buy it here anymore, when it comes back to the old price, the buyers are throwing 4 in the shopping cart. and then the market rotates around again. The high volume that's created here is the fair price now. So too high, too low, new retail price. On Thursday, this was the retail price. So too low, new retail price. So we're doing, this kind of thing. Then we get away from this location. We leave it. Now, initially, we were doing this kind of stuff. So this was too high, and then we were down here. And then once we cleared this low volume area, we found too low. Now, nobody knows what it'll do until it does. Part of the thrill. Now, the highest volume is up here. Too low, new retail price. Lewis, we want tuna. We got to pay $1.25. Oh my goodness, what are we going to do? On sale, too high. And we ran out of time and buyers on Friday. But what was our resistance? 67.04. This was the target on Friday for me. And like everybody else, or not everybody, but at least for me, didn't quite get there. That's okay. Because it was shorts, and then longs. And, it's the kind of day where if you don't have a plan for it, you like any day when we're trading, it's all random and, who knows, right? So now what do we know? Now this is Friday. Now all of this is before the RTH open. So we have resistance at 06. And then if we get up in here, this zone is poorly auctioned. So that puts 67.30 as the next target. If we clear 30, 42, if we get through 42, then here, and that's the all-time high. So the profile allows us to isolate behaviors, see the participant behavior, not with indicators, but with distribution of volume. The truth of the market is in the volume. It's not in the price. We all get hung up on price. Or we use candles and we look at a wick. Well, that's fine. But what does that have to do with participant behavior? We can see a wick and we know there might have been urgency there. But are all prices created equal? They are not. That's why 30 was a target. And I'll show you that a few different ways. And then 42. So my longs in the morning, which I'm no longer in, and now and this is not a recommendation, I'm short, but that's neither here nor there. It doesn't matter. I could be short, long, and whatever. Or in the parking lot taking a nap. It's all the same. It's just trading. So what are we looking for eventually? New all-time high. This is a week high. So the idea, and if you've been following the streams, was the market goes up to go down, the market goes down to go up. This is the target at some point. It may have to do with news, on the government staying open. Who knows? Not important. Is everybody tracking? Are you guys with me so far? How we doing? Are you guys with me? How we doing in YouTube? Please give a like if you're visiting. And now let's get to Bookmap. And what is Bookmap? It's a high-tier order flow tool. Why would we use an order flow tool? So we can see inside. So we are not, any edge you can get is really the business. And how do you get edge? Well, I would say don't do what other retail traders do. That's maybe the primary thing. The other thing is, what tools do you use? How about not using the same tools they use? So, and I'm not saying you can't. I'm just saying it's something to think about. Now, let's look at some statistics. We're in a gap. Hold on, I got to turn some things off over here that are throwing levels into Bookmap that I use for trading, but we're not. Hold on, just got to move some stuff around. One moment. I have Investor RT as my higher time frame software, and it exports data to with this. So these are going to disappear. So let's go here. So yesterday's high is here. So we open in a gap. So we are opening. Let me find it. Where's our RTH open? Where is it? Come here. No, it has to be down here someplace. RTH open was, it's covered up, I think. Guys, where was this open? I cannot see it. around 21, 22 maybe, somewhere in here, I suspect. Okay, so we have our open, so it's a gap. So we're opening higher outside of range. What does that suggest? The market is out of balance. If the market is out of balance, then the potential exists for us to either gap and go, one part of it, or gap, get some responsive selling, and then go higher, or gap, get some selling, go higher, and then run out of buyers and then rotate down and take out the longs. I know you're saying as well, of course. And I'm going to say, yeah, of course, because that is the possibilities. And then we just have to adjust to whatever they are. So for me, my first trade was a long, and I'll show it to you. But let me give you some stats. And guys, you have to vet everything for yourself. Taking out the first hour's high or low is a 98% probability. Getting to the overnight volume point of control. Oh, there's the open. Okay. Let me show you this. I think I just want you to see how this all comes together. Overnight volume point of control. And what is a point of control? It's market profilage terminology from back in the Stone Age, and really a point of control. Let's just tell you what it is. It's volume. It's the highest volume and this is from the ETH. That auction, it's an auction in the ETH, and too high, too low. What's happening? And this was the high volume. So this is the last auction in the last retail price. Okay. Now these singles are low volume areas where we ripped urgently last time we were up here, and these were on the way down, and they're like little gaps on a half-hour basis, and it's from market profile, but it's because of urgency. So when we were selling off last time we were up here, it was like, get out of my way, and somebody's pushing you out the door. Ever been in that scenario? So, and then where's the next one? ETH high, and the ETH high or low has a 97% probability. Which one do you think it might be? And where's the next target? 42.5, another single. And I'm just going to take you back very quickly. There's the 42. There's the 30 single. We've got one down at 06 to fill the gap, and yesterday's high. So we went up, and now we're going down, and whatever happens, happens. Okay, whatever happens in Vegas, everybody forgets. So ETH high, what was that? Over a 97% probability to take the ETH high or low. Well, who knows, right? You feel lucky, as Dirty Harry says. All you do is manage your trade. Now, yesterday's high, and Rod mentioned this in the Trader Lab, posted it. Getting to filling the gap is about a 67% probability. So, previous value area high, about 55%. We'd have to get inside. So, and this 97 is the highest retail price from Friday. So it's possible if we get inside the range, we can test here. None of these are recommendations. It's just levels created by participant behavior. Anyway, I hope you're getting something out of this. Now let's get going. I'm going to show you the first trades. Now, I'm only showing you what I considered structured trades that developing traders can learn. And it's not mechanical. The problem, I think, for most traders is thinking that something shows up, you push the button. Unfortunately, it doesn't work that way. If that's what you're doing, in my opinion, that's not a recipe for sustainability. That's a recipe for disappointment. This has to go beyond what seems so obvious. The thing that you have to keep in your mind as a developing retail trader, what is known. What's known is that over 90% of developing retail traders fail. Over 90%. What are they doing? The other part is, are you doing what they do? Not going to say probably. And if you're doing what they do, you need to learn from it, but not replicate it. And again, that's just an opinion. I'm not saying you won't be successful doing that. I can't say that. But I can say is, the statistics suggest something. Maybe you can learn from it. So let's get into the RTH Open. So RTH Open, there. Now, let's watch. Now, I'm looking for a long because I have a gap and I know I have a weak high. I know that we grabbed our inventory the last couple days. I know these are just the things I know. I know we have the government shutdown thing hanging out. And I know that after FOMC, we had that big inventory grab. So what I know is longs are the dominant side in the higher or intermediate time frame and in the high time frame. I know that. The other thing, let's talk about what we know. We know there's shorts in the market, from the current all-time high in the last few days that let's see if I can get this for you without making big trouble. Whoop. Let's leave the cats out of this. So I know in this leg here, these two selling days, there's shorts. That means buy stops are here. And of course, at the all-time high. So then I have 41 or 42, which is that single. And there's another level in here, 30, but it doesn't show up on this one. But I already showed that to you. So what I know is I can squeeze these shorts. And then if I run out of buyers, and the buyers are the buy stops and new longs, okay. If I run out of that energy, then the sell stops under the market, the longs that are long from here and longs that come in today, me, are going to possibly get taken out, and then we can come back the other way, get new shorts. Then those shorts potentially can become buyers. See, so the market's always rotating. Just something to think about. And again, let's look at this. Where's our resistance? It's right here. 30, the single. Then if I get up in here, the next one was 42. So my targeting for today was 30, 42. And, after that, it's like, what do they call that? The Hail Mary pass in American football. You throw it in the end zone and you pray. Okay. So this is RTH Open. And if you have questions, please post them. I'll do my best. If you really want substantial insight and information on the business of trading, there's that link in YouTube if that is of interest to you. Again, that's up to you. How are we doing, by the way, guys? How are we doing in YouTube, and how are we doing in the Trader Lab today? By the way, please give a like. Subscribe to the channel if you haven't already. Come to the Bookmap Discord server. There's tons of education in there besides Trader Lab. Personally, I think Trader Lab is something you can't afford to miss. But that's just me. I guess everybody, thinks what they do is really good. I've got 46 years doing this professionally and out here with you. I don't believe trading needs to be complicated. I think, at least from my experience, I thought inside the complexity was something somebody else never found. What it turns out is that's not the case. Now, I have an excuse. When I started trading in 1980, we didn't have PCs or the internet, so it was new. All the stuff that you guys are used to seeing in your toolbox was new, innovative. So I spent a lot of time trying to understand what all this was. Here's liquidity comes in the book. That creates a downward skew. Now I'm looking for a long, and I will tell you, trying to get long is in this scenario, and a gap is like trying to catch an anvil that might get dropped on your head. So let's look. So I see the buyers. I go, oh, that's lovely. So what do I know here? I know my buyers are here. My buyers are here. And now I see the buyer, and I'm looking now to get long. Let's look. Take these guys out here. So this is one of the things that I have found is, and it's something that is probably not what most of us don't do, and that is patience. One moment. Got to adjust something here on my trade. One moment. The target at 6.5 ish, which was that single was just tagged. We'll come back to it later. So this is a pick. I call these stop picks. So we pick, we go up, we come back to where this press was. You see how they pull, market comes up. Now going to the moon, Alice, but I see my buyers. Now where's my stops for the buyers in this leg? It's under here. So I can't go running in here, even though emotionally, let me talk to you about emotions. What do you feel when this happens? I feel like I missed the move, right? Well, I also know from my experience that I haven't missed the move, or if I have, it's perfectly okay because I can't respond to what I call FOMO. And you know what FOMO is. I also refer to FOMO as hide, you know, the lunatic under the hood, fight and flight, right? So we come out, the liquidity is here, the stops are under here. So let's look. Sell stops coming out, going to zero. Oh no, it's terrible. Where's it going? I don't know. Here, mid, VWAP. I'm looking at this and I'm going, I don't know. Do you ever go, I don't know? If you think you know, I'm in the I don't know because if I put my brain like in neutral, I'm open, but I know I want to get long. And the reason I want to get long is I know I got shorts in here. So I have what we call responsive selling. That is the gap. And what is responsive versus initiative? The responders are those that go, oh, a gift. I was long from FOMC. This government might shut down. I don't know. We got reports coming out this week. I don't know. Let me get some off the table. Sellers. So I'm looking for a long and I got sellers. Now, not saying that's good. I'm just saying, you know, that's what happens. I don't know. Going down, going to zero. I don't know. So I got my buyers. Somehow I got long at 17. Where was it? Someplace. Hold on. I got to find out where. I got to go look at mine. I got to see where I got long. Hold on, guys. I got to go look back at the open on my trading book map. Hold on, because I thought it was okay. Um, where is it? Oh, here it is. Right. Where is this? Oh, okay. I got long in here, but I didn't get long down here. I got long like in here. So I wasn't thrilled with the entry, but when I have this kind of gap, I'm, which you might say, kind of disturbed by the whole thing. So my target to get scaled was this. So I got my scale and I saw the sweep. Now we talked about this in Trader Lab. And what was that location that we were talking about? 30? Where'd that come from? This is what understanding how the market works. Where'd that 30 come from? Right there. So I had 30. It's actually like, and there's no precision in this, guys. It's like horseshoes and hand grenades. It's areas of behavior. So the auction gives me levels. So the way I was working this trade was the long scale overnight volume point of control, which has then 81% probability ish. You have to bet that for yourself. Then here, that was my trade. I was, that's fine with me. The scale. So what did I get in there? 20, whatever the heck it was. So 20, that's a 10-point scale. And then going, for another 10 points. So 10 scale, 20 on the runner. So it would have been a 30 point. And I say would have because that was the plan. That's just the way these things work. So now what I know is I have resistance here. I also have, and that was the target. See this? So you see how all the pieces come together? So I'm using order flow with the profile as a chassis. So I overlay the trades on the profile. One moment here. One moment. All right, guys, I got to take care of a little something here. Okay. Sorry. I'm doing a little multitasking. Not a gift. Okay, so this is a material event, location, sweep, order flow phenomena. This is a reversal structure. Now, in a trade plan, you have to know, what do you do with this? Do you exit here, or do you, as they say, tighten your belt and anticipate the rotation but stay in the trade? Because what we need to see is, if we come out here under this swing, are the buyers who absorbed here, are they going to show up here? And this is posted in TraderLab. Now, it's a question, it's not an answer. It's like, will they? Notice where our resistance is. It is still here. Notice here, let me draw a little box for you. Now, I'm just grabbing pieces out of this because I can't cover everything, but I want you to see alignment and order flow. So here's the liquidity, here's the sweep. Notice we come back up, the liquidity come back in. Those are your sellers, okay? And you can see the icebergs. And what I know down here now is this is support. Why is it support? You see that yellow line? That's called the variable high volume node. And I made these up. I have no idea. You know, you kind of look at things for too many years and you go, huh, look at that. So what was here? This is that retail price. Remember the can of tuna. Well, down here, this was where the high volume was. And then the volume moves away. That means the buyers and sellers, this is the new retail price. So that is too low. That becomes my support. The way I perceive shopping. Are you a shopper? Now I have a sweep. Remember what was over here? A buy sweep, potential counter rotation. And I came under here, picked these stops off. I call that a stop pick. And it's only because retail traders are like lemmings, no offense. And they all put their stops in the same place. The buyers in here got their stops under here. Me, I don't put my stop with everybody else. And, you know, I pay for the privilege, just like you do. Except if my stop is there, I get taken out here. Instead, my stop is not going to be there, which is why I get risk neutral, so I can lower my theoretical average so it's not all or nothing for me. It's either a full stop or a scale to get 10 points, and then I can move my stop away. So if this kind of thing happens, I'm not going to get taken out. But I know, where's my resistance? It's there. Do you see does everybody see what's here and why? Are you guys tracking? Archer, can I analyze NQ? Oh, I can't do it right now. I'm focused on the ES, but everything works the same. All markets operate the same way. This is the absolute basis of what creates pricing. It's volume and shopping. This works on any market that has liquidity. I think back in the old days, I used to try to trade. I remember trying to, I don't know if I traded palladium or platinum. I think it was palladium that had like 5 contracts in it. But this works on any market. You know, NQ, fine. The thing you have to understand with any market, you have to vet it, because the depth of the order book is going to determine the skidding on your fills and the volatility. Because think of liquidity in the limit order book here as the less liquidity, it's like asphalt. It's smooth. The more liquidity is like driving over pebbles. You know, it slows you down. It's resistance. One way to think of it. I like to use analogies for these things because, you know, we already understand what's going on here. So if you think of shopping, now you're already a trader. You do it in the supermarket every time you go to the store. If it's on sale, you throw 2 in the cart, right? It's a bargain. If the price is too high, it cuts off buying. You see what I mean? Price is too high here. It cut off the buying, and the volume dried up. You see the same thing? So where do we come? We come back here. Now, what was the price previously? Back in your store. Now I get a sweep, support. If I have a sweep, remember what was over here? Buy sweep, potential counter rotation. Sell sweep, order flow, location, location. Let me draw a little line here just to keep you conscious. Let's see what it does. Watch. Break low. What happened here? Trouble. So I get this, come up. Where's my resistance here? There's another one. Let's look at how this works. Now, follow. Now, I'm getting into some stuff here, and in the stream here, I'm just trying to show you ideas. And when you start constructing a trade plan, you would start with understanding how the market works. And we don't know what the market will do, so that part is not part of the plan. If the casinos knew what the gamblers were going to do and the cards coming out of the deck, they would just play the winning hands for them. So this is retail. So this is too low. This is too high. If I break above, where's my last area of resistance? It's this. Is that too high? Retail price from the ETH. If I break here, I get my sweep, and we need to clear this. I'm not paying that. That's the shelf price. Sweep. Support. 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 Resistance. Support. We're out of here. Uh-oh. It got taken out of my long. Made a few burgers on it. And then what? We come out the first hour's low, the IB. Now, this is the current trade I'm in. It's not a recommendation. Who knows? So what I did, as soon as we failed all of this, then it was like, okay. And by the way, I don't trade these little rotations. I'm more inclined, for me, trade less, more range. Just works for me. Less trades, you know? So for me, I'm only on my second trade. So this sets up a short for me, right? In here, right here. Yeah, right in here. And then I'm looking for the scale, which I am, and then I'm hanging out for and there's two targets down here. These are not recommendations. This single, remember, look where we stopped. And we get in there, fill the gap, and then maybe 97.5. None of these are recommendations. So, and again, let me show you where these come from. There's the 6. So what was the high? Here, and where are we trying to go? Here and into this, and maybe 97.5. So, and that's, none of these are recommendations, just a trade, just a trade. But there is a 67% probability we will get to Friday's high. So if you're building out the business of trading, would you be going for that 67% probability? Question mark. And if the overnight volume point of control, which is near the high of the day, an 81% probability. Do you think understanding not only market mechanics, but working with statistical probabilities might be useful? Just a question. So let's see what this thing does. So the 6 is support. Current low of the day is there. We can get under this. We can do this. And if we don't, we can come back across. So let's look at the structure over here. Too low, too high, retail. There's your volume point of control. Fall out of it, new auction. Too high, too high. Retail, right here, high volume. So think of this like your shopping experience. Too low, retail, too high. So if we come across here, there's going to be stops right in here. And then the outside edge could be out here. So we can come there and rotate, and there's going to be stops up here, okay? Or we can push here and then come back there. That would be mean reversion. The other part, just to keep you thrilled, is if we push through here, we can come up there. Now, I can't tell you what it's going to do naturally, but I can tell you what it might do and where. Then, like everybody else in this business, it's maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do any of that, right? So how we doing, guys? Please give a like if you're visiting in YouTube. This is the Trader Lab. You can learn this. Not saying, and here's the other thing about this. What I'm sharing in here can be learned and it can be used in any rotation or time frame. I personally just like to trade less for more range. That's just me. Other traders in Trader Lab are short, long, whatever. They're trading different pieces of these rotations. There's not a right way or wrong way to trade. What there is in the end about all of this is statistical probabilities. Isn't it interesting that this is the current outside edge? 82% probability, and that's our resistance, and that's the high of the day. Now, I don't know, that doesn't predict anything, but if you're trading and you have a trade plan, if you're in the Trader Lab, you would know that these are areas to observe. Then you have choices. When you get this, if it's in your plan, it could be an exit, it can be a short, or you can just hang out and go ride these rotations out. It really time frame. So I see the short up here, but I don't take the short. I didn't get out of my long. So what ended up for me was I ended up getting taken out on my runner, but I did have a 10-point scale. So, okay, it's not a big deal. And then now short. And then I'm just hanging out. And if I get taken out again on my runner, I just get taken out. Okay. But that's my time frame. It's not yours. So everybody goes, well, what's the right way to trade? I'm going to say, you're going to find the right way to trade. But the thing about it is, you need, in my opinion, to start with a broad stroke so you can be much more, you can anticipate your trades and wait for them. So you're not being managed by your emotional stimulus. Traders who don't have an actual trade plan only have emotional stimulus or emotional triggers, fight, flight, FOMO, all that stuff, which we all have heard about, but most of us, when we're developing, do not understand how to manage that. And it's not willpower. Wouldn't it be nice you can say, I'm not going to bail out of the trade? Then you get fearful, and the next thing you know, you bail out. Well, what happened to the commitment you made that you wouldn't? The reason you can't control it is that these emotional triggers, fight and flight, are really primally wired, and there's chemicals that are released in your brain, and this is all about surviving the apex predator back in the day. I mean, the day back on the savannah. So, and that wiring cannot differentiate. Is this a saber-tooth tiger in the market? In other words, there was no market back when this wiring evolved. There's just risk. So perception of risk triggers emotions. So the way to get better be able to manage your emotional state is to actually have to do the work to know and extract where your edge might be and what process or trade management process over time gives you a statistical edge, not the outcome of this trade, the outcome of all trades. Hard for us to think in that way, isn't it? So now, if we did get to that 6, right? So now the question becomes, now, are we going to get the rest of the way? Or because we came down to our 6, and this is a direct hit in the profile world, then the possibility is to come all the way back here. The issue now is this. This is our outside edge. So now, this is where the stops will be. This is a swing high. Let's see where it comes from. It's this. Stops are going to be above here. So if you're hanging out, you might be thinking a bit about where your stop should be and where the trade fails. That's the deal. And we have the volume point of control above us. We can revert to it. So this is important, what we do as we come up. We'll watch it together. How are we doing in YouTube, guys? How about a like if you are getting something from this? I'm going to be turning these levels back on in Investor RT so we can see the actual levels. It'll take them a moment to trickle in, and then we'll keep an eye on things. So our outside edge, you can observe it. All I got to do now is get my chats back. They are disappeared on me. How are we doing in the Bookmap Discord Trader Lab, guys? How are you doing? Don't forget to give a like. It encouraged me to keep doing this. There is no cost for this, and it encouraged me to create additional content. By the way, if you did not visit the Trader Lab, there was some excellent material posted over the weekend about developing expectancy, a process for building a trade plan. By the way, so far, where's our outside edge? It's here. This is called the IB continuation trade. This is a structured trade. I don't call trade, so I'm just, I'm not going to call a trade. I take stops, you take stops. If someone says, hey, what do we all have in common? We all have the same stuff in common. The only thing I have that you don't have is 46 years in this business. And I've done the same stuff. So it's not like I skipped the pain and the disappointment and the random winning trades that I thought I could make better. I did not. So nobody does. It's a matter of, can you recognize a defective process? Instead of trying to bend trading into what you believe it to be, is it possible you're trying to bend trading into something it isn't? And if it isn't what you think it is, or believe it is, and it's not so much think, but believe. I believed, and part of that had to do, there was no education when I started. There were no PCs, no internets, no information. You bought a book or you went to a seminar. That was about as deep as it got. And I will say is I bought all the books and I went to seminars, and I have to tell you, I got nothing out of any seminar that I went to, and I didn't go to too many. They were very expensive. You'd have to fly into a city, put yourself up in a hotel, hang out for a weekend with somebody, and then go, oh, that's nice. And then that's the end of it, at least for me, except one. And that was when Peter Stottlemyre, who created Market Profile, I saw this thing, and you look at, and back then it was TPOs, which was time-based. We didn't have volume, we didn't have DOMs, we didn't have anything. So it was the first time I'd saw something like that. And I got the brilliant idea that if I learned this idea, because it made some sense to me, and I combined it with my indicators, that I'd have a winning combination. And I'm going to say, no, still hadn't figured it out, that my indicators were the problem, not the solution. And the reason they were a problem was because everything has random winners. But I had no anchored inputs. I had random inputs. So when you guys, throw a bunch of spaghetti against the wall, a little of this, a little of that, sometimes this, sometimes that, different degrees of this and that and all that, you're putting random inputs in. Random inputs in a random environment is just junk, noise. And you always have to go back to a proven business model, in my opinion. That's gaming. Casinos pay the gamblers, but they don't change their games. Blackjack. And I know I say this every time because if you haven't thought about this, gaming is a game of chance, right? The thing about the chance is one side has an edge and the other side doesn't, even though the gamblers win. So we don't realize we're gamblers because of random winners. The house, though, doesn't change their games. They don't bail out. They don't throw the cards in the middle of a hand. They don't do any of that. They don't skip the next hand. They don't change the number of cards. Have you ever thought about that? Well, that's our business. So if you understand gaming, now you have a proven business model. You don't have to reinvent the wheel. What you have to reinvent is yourself. You have to reinvent yourself to become a trader, not a predictor of outcomes. If the casinos could do it, they would have. They can't. So what are you trying to do? You're trying to bend the business into being right? Defeating your ego? Are you pushing the button for a dopamine fix? Are you predicting? How about that doesn't exist here? So while you're trying to do those things that are not aligned with this business, what are you actually doing? How about maybe setting yourself up for failure in spite of the random winners? For me, it was the random winners, because my belief, and I'm always going to use the term belief. I believed if I could make it better. So why wouldn't you try to make it better if you believed you could? I mean, it's just a matter of persistence, isn't it? How about it isn't? How about you want to persist in finding a process that gives you an edge, not persist on trying to make the market fit your belief if it's defective? Just remember, ancient mariners thought the earth was flat, and if they sailed to the edge of the earth, they would fall off. How long did that belief hold true? Well, is it true? No. But do you think it was believed? So in the minds of those who believed it, it was true. Maybe it's a poor analogy, but I think you might get the point. Is that making sense? So now it's just a matter of following your plan. For me, this thing doesn't go south of the border until out here, because it can come out. It can squeeze the buy stops over here. All right. So we have liquidity still in the book over here, outside edge. If the buyers come up, and the buyers can be buy stops, we can come out here and take this liquidity and come outside, squeeze these guys. Then if there's absorption up here, we can rotate and continue down or not. I mean, that's all I can tell you about it. That's all I know. And I'm sticking to it. Please give a like if you're visiting in YouTube. And review these streams if you find them interesting. Trading is not a video game. Trading is really a strategic endeavor. And the results of trading are over a large sample size, not P&L. A lot of amateurs that I've observed over the years, it's all about P&L and ego, gratification. If you have an ego in this business, it'll be walked on by the market. It is not a good place to be. And I'm saying that because you can't help having an emotional response. But let's talk about emotional responses. This, if you're short, you feel good. This, now you're starting to panic. Oh, maybe I should have got out here. Maybe because the buyers are here, I should have watched this and gotten out. Well, maybe you should have. What's your plan? The only thing you should do is follow your plan. Where does this trade fail? Above here. Well, then it's whatever. And remember where it can go. Let's come back. Notice where the liquidity was. Let's come back. Just going to throw a little something on here for you to think about. It's not a recommendation. It's just interesting. Sellers skew the book. Sellers skew the book. Sellers are here. So we want to see what happens with this liquidity. It's kind of a way to think about it. Now, it's not predictive. Part of the thrill with liquidity is they can pull. So these guys are here, and all of a sudden they go, this is an algo, you can see it. This pulls. Or what? Do the icebergs come in, and then once they get short, and this is just a guess, I can't tell you, these guys come back again and press it and skew the book. So what's going on here is the sellers are skewing the book. So we have to see, and the thing is, this can change in a heartbeat. The other thing we know is there's stops at the mid, stops at the VWAP. So we can vary retail trader behavior. So I know this is where my liquidity was or is, and what happened back to the left, and I know stops are sitting here. So if it comes out, it can very well come up here, the low volume node or outside edge, and either it's going to keep going, come back here, one possibility, or come out in this area and come here. And that's called mean reversion, underlining the word mean. That's it. So now we can sit back together and go, I don't know, it might do this, it might do that, and it might do none of the above or all the above. Let's see if we can anticipate the behavior. You notice I don't use the terms predict. I have no clue. In fact, I always post I am clueless. And I do that so I don't become myopic and close off the possibilities. So I'm clueless, but not ignorant. So I just take it as it goes. I'm hanging out, and if I get taken out of my short, and that's not a recommendation, I trade a different time frame. I'll sit in here, and if it takes me out, on this one, I'm trying to think what will happen with this one. Scratch. So the worst that happens to me, if it comes outside here, is I scratch the trade, and then the lunatic under the hood, who I call Hyde, Jekyll and Hyde, is going to say, well, you should have got out there. Right. Except, no, I just ignore it. Hindsight's 20/20. And the lunatic under the hood is always going to scold you. You shoulda. Well, how about this? You shoulda follow your plan, not shoulda, in hindsight, berate yourself for something you can't know. Now, if you have a plan that says stay in here and scratch, that's what you shoulda do. The end of the day is not your P&L. The P&L is the outcome of following a plan that has an edge. It's not built on one trade or your euphoria or depression over the outcome of an isolated random event. Can you look at the business that way? Or are you going to use it as a approval system for your self-worth? All of these psychological impediments will crush you and take you out of the business, because now you're not following a good business practice for this business. You're following your emotional needs. And many, or I would even say most, developing traders have no understanding of what's at work and how their own behavior gives them opportunity to fail. They don't even recognize it. And the only reason I can say that is over the years, I've worked with a lot of traders, mentored them, coached them, sat on trading desk, and I saw what I thought were candidates, for sustainability that failed because they never mastered themselves. The market is not the problem. I believe anyone who comes to Trader Lab can learn how to trade. I mean, if they do the work, but it doesn't mean they'll be successful in the business, because the thing that needs the most attention is the self, not the market. This is not complicated. It is random. So if you're interested in learning how to trade, I believe Trader Lab, the tools and the environment that's in the Trader Lab and the support systems and the focus on psychology can get you a long way towards your objectives, if that's your objective. If your objective is to, turn on a video game and have an ATM in the basement, I'm going to suggest, unless, of course, you're the statistical exception, that's not a sustainable process. You guys have questions, post them. Take a look. And please give a like if you're visiting in YouTube. How are we doing in the Trader Lab? You guys doing all right? So let's remember, there's a 67% probability, past performance not indicative of future results, that we end up over here. If we get in there, that sets up this. So we have 97-ish and this 67. So 67. Now, this is not a high probability target, but it is the last retail price from Friday. And we know what might be too high, which is this. And we know what might be too low. There's also the ETH low somewhere around here. I don't know where it went. Where's that ETH low? I think the ETH low was yesterday's high, wasn't it, guys? Oh, it's yesterday's VPOC? Is the ETH low yesterday's VPOC or close enough? So we'll see what it does. So we have to watch for it reaching up. Remember where our liquidity is, right? This is our area. So we want to see out here. This is called the outside edge. So it can come in here. And remember what's sitting up here, stops at the high of this swing. This urgency creates this low volume area. So the market could come up, and that's what it looks like right there. So the market can come up into this area and pick off this swing, the stops up here. And here's where the liquidity is. Now, I don't know if it'll do that because I can't tell you anything about what it will do. I'm telling you what it might do. So if I understand what the market might do, if it does it, I already anticipate it. And then if it sets up a trigger for me, if my plan suggests continuation back here, then I would be looking potentially, and this is not a recommendation, for a short to come there and to fall out the bottom. Or, let me give it to you, you have to always think about the other side, or we come back through here and come up into the mid, the VWAP, and squeeze the you-know-what out of everybody, and we come back here. That's what I know. So I know this is my line in the sand area. It's not firm. It's an area. So, and I call these stop picks. So if I come up here, right there, I know, and I got my mid. So what's sitting at the mid in the VWAP? Retail traders. What else can we anticipate? If I come up here and exhaust, I can come back here. So I already know, unless things change, and I'm not making a recommendation, I'm just talking about possibilities, that I have another short lining up, unless the condition changes. So for me, I have no longs at the moment in my time frame. And if I get taken out and this thing does whatever it does, I have other trades to get back in alignment again. You know, that's it. It's not complicated, just random. 96.75 ETH low. Well, that all lines up if we can get in, get under yesterday's high. And if not, then we might squeeze. One of the things, guys, to think about, I always say this, and it's in all time frames. Market goes up to go down. Market goes down to go up. Market goes up to go down. Market goes down to go up. In all time frames, market goes up, go down. Market can go down to go up. Whatever it does, right? In all time frames, market goes up to go down. Market goes down and then down to go up. Yesterday, market goes up to here to go down. Market goes down and then we'll say, or not. You see how it works? So you slice out the time frame that fits your psychology and risk and the rest of it. And then you do your thing. We have traders in Trader Lab who are selling this thing, buying it, flipping around. That's cool because they can do that and they are experienced. Then there's someone like me, been there, done that. I'm a little more put the trade on and go for higher, larger rotations. But the offset to that is I can have MFE, open trade equity, and give it back. So I have to accept that. And I'll tell you, emotionally, even though I'm used to it, it still disturbs me. Because the voice in your head is going to say, you had, you coulda. That's hide. Well, I don't listen to hide. because Hyde is not a trader. Hyde is still wired to bring home the food back to the cave so we don't starve over the winter. Look what you had. And it got away from you, the hunter. Or, gee, the saber-toothed tiger is coming. I better get out. If you're sitting short, you bail out here. Isn't that what we do? Have you ever asked why you do these things that are not in your self-interest? It's because you don't understand trading. And the elements of trading are not, quote, setups. The setups, there's those 60 PDFs. You want trades, you have more trades than you know what to do with. The thing is, in Trader Lab, the primary trade is one specific trade. Do you know what it is? It's called mean reversion. What is mean reversion? You're seeing it right here, right now. It's outside to there. Outside to there. That's the mean. If I pull outside and I can't get above this outside edge, the low volume node, where might the market go? There. That's called the mean. High volume node. Remember, in this, if you go back and watch this just today, what was I talking about? Outside edge, somewhere, and it could have been there or there, right? So my stop, not a recommendation, is not sitting here. And what do I know? My sellers are here. There's the liquidity, and that's absorption. That delta absorbed. So where's my outside edge? Notice where the box is drawn? See, this is the whole point of trading. I don't use any indicators. Is this complicated? I mean, do you have to be a quant or a math whiz to do this? How about just be a shopper? You shop in the supermarket, that's trading. It's just a very long time frame. Prices don't change. Here, the pricing is changed every second because a buyer and seller is interacting. So these buyers and sellers are trying to figure out what's too low. There's the buyers, and what's too high. There's the sellers. That gives us the rotation. Now, if I find my sellers, now I have my absorption here. And where's my sellers again? They were there, and there's that liquidity. Notice how it's coming down? What might that do? Skew the book. What's sitting down here? Liquidity. What's going to happen here? They're probably going to be buying. What do you think? That's it. And we need to clear this to get there, 67% probability. This is as complicated as it is, and I don't want to minimize the difficulty of trading. What is difficult is randomness. We need to separate complexity from simplicity. And the fact of the matter is, this is simple. What's complex is our emotions and our uncertainty operating in a random environment. And that's, at least for me, the complexity of this thing. Us. You need to know yourself. Trading is not difficult. It is us that are the difficult component because of the random nature of this thing. I mean, who can say that we won't take this out? I can't. What I already know is we can. So if I know we can do something, then what am I going to do? Am I going to bail out here because I don't want to give back what I already have? Do you know that open trade equity is nothing? Because until you get it, you don't have it. Any of you have ever owned a stock that's gone up and now you're feeling really good about it, and then the thing goes below where you bought it? What was that? Did you have those profits in your account? No. You got to sell it to get a profit. Otherwise, it was just, as they say, paper profits. So you got to learn to manage your emotions, and you got to get familiar with your emotions. We talk about that a lot in Trader Lab. We have a trader in Trader Lab, JJ Marks, psychologist. And I'm saying is, how do you move a therapist's couch into a chat? Haven't figured it out yet, but we're working on it. There's so many great books written, about psychology, and it's never given what it needs to be. We're all focused on setups, the holy grail, the one thing you need, the hot chat, the latest guru. That's not the issue at all. This trading is not complicated. It is us. And if you put everything else aside, You can come to Trader Lab, you can learn one specific condition to trade, and now you'll have a laboratory of yourself to see, to find out what your issues are so you can work on them. The primary trade that I suggest and I always focus on for developing traders is this trade right here, outside in, mean reversion. This is the most common behavior in the market. It happens all the time. So if we understand reversion, then all we're doing is looking out here to come here to get risk neutral. Now, the worst that happens is if you have, let's just use a simple example, a 2-lot. You put a 2-lot on, and this is where you need to scale. So you have, 4 points or whatever, 3.5, 4 points. That's all you need. Now you're risk neutral. Now you're managing the lunatic who's fearful. And yeah, you'll get stopped out with the rest of us and scratch your trade, and your broker sends you a gift basket. Or it goes on to the next target. So the worst that can happen here, assuming you don't take a full stop, which we all do, overhead and cost of production. Don't forget, casinos pay to gamblers. You don't see the dealer go out behind the woodshed and beat himself with a frying pan. Just deals the next hand. So when I take a stop, and traders who understand the business take a stop, I always go, that's interesting. That's exactly how I do it. I no longer, there is a sense of disappointment, but not, like it's the end of the world. It's like, did I follow my plan? Yeah. Did I know what it was going to do? No. Well, then what are you responsible for? The things you can control. What can you control? What you do. What tells you what to do? Your vetted plan. Do you know what to do when it comes up here? Yeah, my stop is where it's supposed to be. So if I get taken out, I followed my plan. What pays me? One trade or my plan? My plan pays me. One trade is inconsequential to the overall outcome and my net. Individually, it's everything, right? It's like we live or die on the one trade, but that's not the business. The business is coming to the market with a plan that has an edge. You show up with your plan. If you ever are asking yourself, listen very carefully to this, if you're ever asking yourself, what should I do? You don't have a plan. That's the answer. The what should I do is all done outside of the market because you're under the influence of chemicals when you're in this. So you can't be going, what should I do? You're going to be vacillating on these rotations between depression and euphoria. You see, can't function in that. So what you should do is already laid out because now you're just waiting to see what the participants do. And you're participating with an edge. Does that make sense? That's trading. Might not be your thing. Might not be what you think it is, but I'm going to suggest how to trade with market structure. How should you use this? Well, trading with anxiety, and I understand that. We all trade with anxiety. Anxiety, by the way, is apprehension of the unknown. So that creates our anxiety. I feel anxiety because I can't predict anything. So what else are we going to be? We're going to be anxious. Come to Trader Lab. If you want to learn how to trade, I believe anybody who comes to Trader Lab and does the work, and I have to say that work, can learn how to trade. And the Trader Lab's a community of like-minded traders who've come together to leverage their collective experience. There's not one way to trade. But if you're not successful and sustainable, in spite of the winning trades that you're trying to get more of naturally, and squeeze out the risk and create certainty, which unfortunately does not exist here, then you can't squeeze the risk out. What you can do is create edge and accept the risk. I'm still sitting short. I'm not saying that's a good idea, but what would I do in the old days? If I'm sitting short and I get this, I might bail out. Or I get this, I don't want to take a stop. I have a screenshot from, it's got to be, 20 years ago, maybe, of a trade I put on. And I got scaled. And where the stop, and I got scaled, but I still had like 3 ticks of risk. In other words, the scale and the structure dictate. So I said, I don't want to give up 3 ticks. I moved my stop. And I wasn't even conscious of it. It rotates. It takes me out by 1 tick. and then it drops like 25, 30 points. These are ES, biggies. And it was so egregious to me because, and here's the thing, it wasn't in my plan. What happened was Hyde, the lunatic, responded to the, I don't want to take a stop and take a loss. So I saved myself potentially a couple of ticks and gave up a substantial amount of dollars. So I took a screenshot. In fact, in the Trader Lab, we have something called the error cost calculator. And Greeny, thanks for putting that together and sharing it. It's available at no cost, as well as a library of webinars. And in fact, I'll try to show you this while I'm waiting on this trade. And hold on, I'm going to try to do this without making trouble. A document section, and of course, the Trader Lab community itself. This is what it looks like. So there's a lot going on. Charts are being posted, mutual support, a little humor from time to time. Here's a trader that trades in his car. No comment on that. He actually does. Haven't figured that out yet. I don't think I would try to trade in my car. I don't talk on my cell phone. How do you trade in your car? So there's a lot going on here. And over the weekend, there was just tons of stuff in here. The library of webinars, there's a pin at the top. Thanks, Ned, for curating this. Watch the primer webinar. It's just a high-level overview of the business. It's got about 33,000 views. You might want to check it out. The Holy Grail of trading. How close can you come? There is no Holy Grail. Gee whiz, come on. Day trading, fantasy versus the reality. Stop gambling, start winning. Trading multiple time frames. How do you operate in multiple time frames? Why do most traders using indicators fail? Are you trapped in Trader Groundhog Day? I made up the term Trader Groundhog Day. You know, work hard, curve fit, tweak, tune, feel good, random winning trades, no good. Come back, do it again. Do it again. Trader Groundhog Day. All this is available to you at no cost. You can access this if you're visiting in YouTube. You may find this useful on your journey. Doesn't matter what you do or how long you've been trading. I created the Trader Lab out of sympathy for retail traders. And now with the internet, you know, it's the opposite of what I had. I had no information because there were no off-floor traders when I started. All my buddies were floor traders. They thought I was nuts. And the reality is, I didn't know I was nuts. I had no idea. And again, there was no information. I shared an office with George Lane, who created stochastics, you know, an oscillator. So I thought, and I was really into indicators. I thought, well, this is great. All you got to do is put these indicators together. And let me put a couple of them. Let's do a few more. Let's create our own. And back then, it was, you know, advancing declining shares, advancing declining volume. I put oscillators on everything but the kitchen sink. Did everything you've done, and I would say probably a lot more because I had more time to do it. And did my own stuff, built trading systems because I ended up being a money manager eventually. And I was never satisfied with it, even though I you know, was a winner. And but what would happen is it was constantly breaking down. And I, you know, so I kept meticulous stats. And I also, when I built the system, it was so I could optimize it. So all I did was take what I was doing manually and then did it with a PC. And my first PC to do that was what's called the 286. And I think that was the first Intel, you know, heavy lifting IBM. Actually, before that, I had an Apple IIe. George Lane had an Apple I, and we shared the office. So I had the high tech. Yeah. So I'm just saying, you know, I've been there. And I've got some experience. But the thing that nobody ever told me or taught me, or nobody ever talked about it, was the psychology of this whole thing and how that is really where traders fail, but that's the last place traders look at. Who was it who said, I think it was Socrates, don't shoot me if I say this, who said, know thyself? Was it Socrates? Can't remember. Anybody know? I know all you guys are now going and asking Chat GP who said that, right? Nobody's answering, so nobody's ever heard that before. The real challenge in this business is you. You. Socrates, it was. Okay, thanks. Oh, Aurelius? What, Marcus Aurelius? No, I think Marcus Aurelius, you know, wasn't he the guy who was fooling around with Cleopatra? How we doing in YouTube? Hope you're getting something out of this. Notice how we're testing this single. If you understood how the market works, you might have taken your profit right ahead of this, or you're holding for this 67% probability, and 67 is not 100%, right, guys? And potentially down here, over 98% probability to take out the ETH higher low. Would you be working these statistical probabilities? And that's available to you in TraderLab also. Isn't this interesting? So if you're visiting in YouTube, guys, why make trading more challenging than it already is? The challenge is not learning how to trade. The challenge is you're polluted with so much useless information, influencers, and all that. And I'm sure that, and there's also decent educators out there. How can you differentiate? You know. Now, when I started out, there was no internet, so it was ads in Futures magazine. Back then, they called it Commodities magazine. We didn't have futures. Literally, they called it commodities because it was commodity market. When I started in the business, I was a commodity trader. So, everybody thinks, oh, you're some kind of lunatic. Well, if you knew the guys on the floor like I did, it was a bunch of lunatics running around. I initially came into the business. I was brought in by one of the largest grain traders in the world. And my interest when I came in was not to be a trader. Well, I should say not to be a speculator. But I got I went to CME and took a course on classical bar charting, and the light bulb went off. I said, oh, this looks interesting. And it went from there. And unfortunately, I had to unlearn things I believed, which is another conversation for another time. We could always talk about this in TraderLab. So we're coming into the landing zone, I think we call that now. And liquidity is sitting at 5. That's front running the gap. And don't forget, we have the ETH low sitting out in front of us here. So you might get some front running of this liquidity. So the next target, not a recommendation for me, is out this way, and then whatever. And a 98% probability to get here-ish. You have to vet this for yourself. This 67% probability, and this is an obstacle. So we'll see what it does. I hope you're getting something out of this. And if you are, give me some encouragement to continue doing this. Anytime I'm doing this, I'm not initiating trades. I am managing trades if they're open. But for me to put a trade on, I've really got to be highly motivated to do it. Duzman, institutional trading, I would focus on your trading. Prop, they're not interested in retail traders. The ones that I know that advertise are looking to sell courses, and it's just another money making opportunity. And I'm not talking about these bogus funded accounts, which are designed for you to lose. It's just basically online betting. Now, there are ways you can use funded accounts in a development process. And if you guys are interested in that, you can come to Trader Lab. We can always talk, as they say. But for the most part, those are just places for traders to learn gambling and get the same results as gamblers. Just an opinion, naturally, but it's worth something. Okay, let's see what we get here. Sellers are still driving the bus here at the moment. We can anticipate a counter rotation down around this, and we have the liquidity. So everybody knows the liquidity is here. Why, even if you don't have an order flow tool, if you look at your dome, you see this sitting in here. So that's a magnet, the market. So there's buyers here, and we can run through it or rotate ahead of it. But it is still statistically a 67% target. And then our ETH low and all this is down here. So this is over a 98% probability. So, you know, you can watch this. Renee, the Wyckoff's fine. You know, Wyckoff came up with some good ideas. And it's old, but it's still, you know, there's nothing new in trading, guys, other than bells and whistles and shiny little things for you to buy. Wyckoff is good as far as the structures and how he talks, you know, his coils and stuff. And some of the triggers that you see me using here match up with Wyckoff. I never studied Wyckoff, but I'm certainly aware of him, you know. I think Wyckoff is fine. But everything that we study in trading has to be adapted to our psychology. And there is no prediction, you know. This is a business of alignment, not a business of being right or predicting what it'll do. So for me, I understand the condition of the market. I understand that we squeezed out shorts and that we ran out of buyers. So the shorts got squeezed. Now we have buyers in the market from this morning, and buyers are in here from Friday. So now we can come back and give these guys a little abuse. And there's the ETH low, which has about a 98% probability. And this was the retail price. Remember how the market works. It's a shopping experience. So if this is too low, the target coming up was 30, right? The overnight volume point of control, retail from the ETH. Let's look at the logic, maybe, if I can open this up. So that was our target, 82%. This is the next target, sitting at 30. All that's on the chart. If you haven't seen that and you're late to the stream, just watch the stream again. You'll see all this laid out. And this is all before the RTH open. Then, if we find too high, in other words, I'm not paying that, wang, hit head on ceiling. Who knows? And remember what my targets were on the longs. Not saying it's right. ETH high, 98% probability. And then up here, next layer. This is where my orders were. Once we fall out, turn the barge around. Now short. Playing the statistics going the other way. Only had 2 trades. Not enough action? Well, I'm just interested in profit. That's just me. Please give a like. If you're interested in this, use the link in the bottom of YouTube. There's no cost for it. It is available to everybody. The Trader Lab is open. You don't have to be a Bookmap subscriber. You will not be abused or solicited, but you will be in a serious community. This is about the business of trading. If you're interested in the business of trading, use the link down there. Also, please leave a like. And encourages me to keep going. Subscribe to the channel and visit Trader Lab. Thanks again, guys. Have a super day. And I look forward to seeing you again next time in the Trader Lab.